This is the July 2022 Las Vegas real estate report, folks. We have definitely shifted. The market is shifting, and we're going to talk all about that today. My name's Jan O'Brien. I am a co-team leader and business coach. This is my amazing team with my co-team leader, Cosmo, Dennis, Vicky, Katie, and John. We cover the entire valley, including Pahrump, Boulder City. Just reach out to any one of us, and we're here to assist you with all your real estate needs. Here's what I'm going to cover today. Go in depth with what is happening in our Las Vegas real estate market. We cover 4 key areas each month just to compare it to the overall stats for all of the valley. We're going to talk about opportunities for buyers and sellers in this market. And I'm going to talk a little bit about what's happening with mortgage rates and a little on, how does this all impact the housing industry, what's happening with inflation and talks of recession and so forth. Let's dive in. So here it is, folks, a housing snapshot. This is the first month in, over a couple years now that we can actually report that we had a decrease month over month in the median sales price. So in May, it was $482,000. In June, it was $480,000. That is still up 21.5% over the previous June. I have a couple great charts to give you perspective on that in just a moment. What's the story here? Here's the story. More inventory available at the end of the market, at the end of the month in June. That's up 134% year over year. New listings are up 21% year over year. And also units sold are down 25%. That in a nutshell is talking about the story. Every month on this report, up until last month, and now even more so this month, I'm constantly talking about how there is high demand, low inventory, creating the perfect storm for these increasing prices. And this is what's changing now. We have more inventory, more coming on the market, sales slowing down. That has a lot to do with obviously the interest rate moving up in the 5s now. And so that's the market that we're in. And we've gone from under 1 month of inventory. Some months it was half a month to 2.2 months of inventory. So that tells the story. Very quickly, in condos, median sales price of $280 in June. It was $285 in May, and that's still up 29% year over year. So here is a great chart that just tracks where we've come all year, right? So the median sales price, $435 up to $482, and now $480. And I want you to see the new listings here, right? 2,900 in January came on the market. Well, we have 4,674 new listings that came on the market in June as comparison, right? And available inventory has gone from 1821, meaning an available inventory simply means at the end of the time period of this month, how many single-family homes were on the market for people to even look at. It was 1821 in January. It was 5746 in June. And there we go. 0.7 months of supply inventory up to 2.2 months. Now, I like to keep things in perspective. Here is a chart going all the way back to 2015 showing the number of new listings. And you can see it's seasonal. I talked about that last month. Look at this big spike here. And this is what I really want everybody to understand. So when we talk about perspective that it's up this many percent year over year, right here in before the pandemic, this is what we generally see. You know, these are the years of the pandemic here. Anywhere from 6,000 to 8,000 listings on the market. Well, we're moving into that territory, right? We dipped below in the right here in March. If we went into like March of 2020, the beginning of the pandemic, we were here, and then it went down, went down, went down. This is the available inventory, right, that we've lived through for the last couple of years. And then it peaked up a little bit last month, and here it is here, right, with a big jump up because of not as many sales and more inventory coming onto the market. So we're getting closer to where this more average time frame is, where we're not in such a hot seller's market, okay? This means more opportunities. I'm going to talk more on that here coming up. So let me give you a little perspective. There's another way that I just showed you that chart in a graph, and now here it is in a bar chart. In January of 2021, the median sales price for single-family homes in Las Vegas was $345,000. It kept going up, up, up. We kind of plateaued. This is what I'm interested to watch and see, because we're just doing June prices. We're just talking about June, but in last year we had a jump from June to July of 405. This year we have not seen that. We actually went down 2,000 from 482 to 480. And then it plateaued through the summer, which is not uncommon. Sales can slow down in the summertime. And then it peaked up again, and we ended the year at 425 in December. Let's go to this year. So we went from 425 to 435. There's 10,000. Here's 15,000, another 10,000. Here's 15,000. And then here we are going from 475 to 482 in May. And now at 480, we'll watch and see what happens. We're projecting that this is going to stay flat. Could it go down a little bit more? Yes, if we keep on getting these numbers of homes coming on the market and not as much demand for selling, then I do think we could see this peak down. But keep it in perspective, right? People who have had a home for longer than 2021, January 2021, that median sales price has gone from 345 to 480. If it goes to 470, 466, we have to keep it into perspective, is what I'm saying. When you see prices are coming down, that's just decelerating. We're not continuing this crazy climb in pricing, which is great if you're a seller, not so great if you are a buyer. So let's look at the weekly. We're going to go a little granular here. We track these weekly stats as well. And this is just useful to point out 2,100 up to 6,675 available homes. And this is just reporting the previous week. And this, I wanted to point out right here where we can see this decrease starting. We had a week where it was 499, again, it's better to look at the big picture for trends month to month, but we like to look at it weekly to project what we think is going to happen. And to advise our clients, sellers and buyers the same. We use this in our presentations when we sit down and consult with a buyer or a seller. So here we go in June, starting mid-June, which was the previous week. So the second week of June is what this is reporting on. 499 was the median sales price, and it dipped down to 479, 480, 473, 475. And now we're seeing 1 week doesn't make a trend. So it could be lots of reasons, obviously, at the lower end prices, making this 465 go down a little bit more. But here we go, price reductions. All right, this tells a story too. People weren't really reducing their prices until a couple months ago. And now we're really seeing acceleration of listings and sellers having to reduce their prices to the tune of 1,117 last week, 953 the week before. You can see the numbers here. And inventory. We've had several weeks of 1,000. Last week it was only 912, but 1,900 to 1,000 homes, about 6 weeks of that. That's where all of this is happening now. Cash continues to be a big percentage of the market, right? It was a little bit 33 or so percent the previous month in May, 34.2% of all sales, single family homes that sold in June. Actually, I think it's all of the homes were cash. And short sales and foreclosures continue to be not an issue. This could tick up in the future, but again, people have equity. They have options, and it's going to take a minute for us to see more short sales and foreclosures come on the market. All right, let's take a trip around the valley. We like to do this every month as well. Remember, we're comparing 480, which is basically all of the valley, every area that LVR, Las Vegas Realtors, reports on, single family only, 480. And these are comparing single family only also. So we'll go over here to Summerlin, and it's all of the Summerlin area. And that is always quite a bit higher than the median sales price for the valley as a whole. So 727,000, that's up 14.7%. Now, we have consistently been seeing these areas have 25, 26% year over year appreciation. Here's a little perspective of it slowing down, deceleration of appreciation. It's only 14.7% year over year. Now, a very high average sales price because two of the 152 homes that sold were a $17 million home and an $18 million home. If we take that out of the mix and just look at the 150, it'd be about $894,000 as an average sales price. But 727 is median. Remember, median is smack dab in the middle of those 152 homes. Half were higher and half were lower. And that's down 38%, the number of sales. Here is again, 30% more listings came on the market from June of last year. And interestingly enough, it was about 236 listings in May in Summerlin and 337 in June. So we'll keep watching these stats every week and month and report it right here on the channel. Inspirata, the area, the newer master plan community that's down here in Henderson, 522, 500 was your median. That's up 8.5% year over year. Once again, a slowdown. It's always been 25 or so percent all year so far. 32 units sold, down 18%. And again, 34% year over year increase in the number of new listings coming on the market in the month of June. Now to Silverado Ranch, and it's more than Silverado Ranch. We really just use this whole area I'm outlining here amongst the highways. 485, so very closer to the median sales price is Silverado Ranch. It's an older community, a large community, and you can get a lot of get the more median sales price in that area of town. Up 16%. You can see kind of a trend here. It's not in the 25s or so. We're definitely decelerating on that average sales price. So it's not going to continue to skyrocket. 98 units sold, that's down 36%. And we had about 10% more listings than the previous year at 184. And then we'll go out to Pahrump. And 394,900 is that median sales price, up 21%. And that had been up about 30% most of the months, 25, 30%. So again, slowing down in how quickly things are appreciating. 59 units sold, 28, that's down almost 29%, and up about 16% in new listings for the month at 128. And again, we're just looking at single family homes. So where are the opportunities? Well, the opportunities are definitely there for buyers, but I also feel that if you're a seller who's been on the fence for a while, trying to time the market, here's the issue. You might have missed the top of the market. However, it's not the end of the world, because the concern we have had from sellers in the last 2 years is that if I sell my house right now, when things were selling so quickly, you put it on the market, it's sold, you get multiple offers, people are paying over appraised value, just all kinds of crazy stuff happening. That part of the market I believe is gone, with the exception of little pockets of homes that sometimes we are still seeing multiple offers, especially if the home is renovated, it's in awesome shape, and it's priced well. We're still seeing multiple offers. But for the most part, you're not going to see that. You're seeing price reductions. You're seeing, it's an effort to get clear about where you need to be priced to be competitive. But if you are that seller who was thinking of selling, or you're thinking of selling now, here's the upside for you. There's more inventory, because as I said, or tried to say a minute ago, what we were hearing is, if I sell my home, I have nowhere to go. That's not true now. You can almost get you can't ever get the best of both worlds, but you can get the most of the changing market as a seller, still get a really good price, and maybe have to negotiate. But when you go put the buyer hat on, you get to negotiate. So buyers, that is the opportunity right now. From new homes offering incentives like locking in a lower 30-year fixed for conventional FHA or VA financing. We're seeing several builders do that. We're seeing builders reduce their prices. They're trying to get rid of the inventory that they have available for quick move-ins. There's tons of opportunity there. There are, as we've just said, I've just shown you, if you're a buyer, sellers are reducing their prices. We on our team, in our recent sales, we have definitely been able to get our buyers everything from 10 to 20,000 below the list price to 10,000, 5,000 in incentives, or not incentives, but in closing costs, seller concessions, right? There's opportunities to negotiate right now. So that's the opportunity. And I think that's going to bring me to a couple things about what's happened national. I'll wrap up with mortgage rates. Okay. So national housing, all the talk that you might see, you go to YouTube and it's like the housing market's going to crash, the stock market's crashing. There's a lot of clickbait and headlines to get you to go watch all of that. But here's the bottom line. I think I've just shown you, barring some massive, economic disaster, we are, no one is forecasting that we're going to have this major depreciation. Even if we're into a recession doesn't necessarily equal a housing crisis. And I shared a chart in our last month's report that said out of the last 6 recessions, only one of them, and that was really the Great Recession, did we really see a decrease in. But that was different. Back in 2008, we had bad loans, people, with no qualifying, the qualifying for mortgages now has tightened up since that crash. People, everything went upside down, and that is a very unique situation here. We have equity. We have people that are less at risk to go default on their loans because they had to qualify, and have higher interest, have a higher credit score, and so forth. So no one that's an expert in the real estate industry is projecting a decrease, a negative in annual appreciation. Okay, we started out the year in Vegas with 20, 25% year over year appreciation. Now, as we move through these months, are we going to see that slow down? Yes, I think so. Across the nation, they're saying the average of all of these is 8.5%. I personally think it's going to be higher for Vegas. We could be 10 to 15%, even close. It just depends on what happens the rest of the year. All right. So that's good news. Inventory has definitely ticked up, right? So this is month over month. We were 32% in the whole state of Nevada compared to the national average of about 20%. But this is kind of happening all over the country, that inventory is coming back on the market. And this is a great chart that just shows the correlation of mortgage rates and recessions, right? So look at this quote here. Throughout history, during a recessionary period, interest rates may go up at the beginning of the recession, which we've seen that happen. Well, we're not technically in the recession, but all things point to maybe we are. That's where we're headed. 2 months of GDP, 2 quarters rather of GDP going down is what we'll call it a recession, right? But we know that inflation is going up and so on. And we all know that personally, from gas to, buying eggs at the grocery store or a loaf of bread, for God's sakes. I can't even hardly take it anymore. But in order to come out of a recession, interest rates are lower to stimulate the economy, right? So if you go look at, these are all the recessionary periods, you can see way back here, 18 to 13%, right? 11 to 8.8%. This was just during COVID and stuff. We went from 6% down to 4.9 and lower, actually 3.8 to 2.8. And now we've peaked here and we're up, we've gone up now. And this is where, as of recording this, right around 5.73%, 5.25 for FHA and so forth. And they vary. Mortgage rates vary every single day. But mortgage rates, even though the Fed's talking about a big rate hike because of the CPI and all that coming out, inflation being at 9.1%, as I record this for the previous week, the report that came out, the Fed is coming in a week or so talking about maybe 100 basis points instead of 75 from the last time, which is to try to get inflation to come back down. The mortgage interest rates are going to react to the 10-year treasury, and they're looking to the future. Mortgage-backed securities, they're not going to jump with that. That Fed rate change is going to impact credit cards and short-term loans like cars and so on, but not your mortgage rates. Okay, so we'll see what happens, but it's very possible as we move through this and get inflation under control, the interest rates may come down. They could, but right now they're fluctuating, and we just locked somebody in at 5.5% interest, for a 30-year loan. Okay, so it's dependent upon your credit score and a whole bunch of other things as well. So there you have it. Yes. When we talk about during the pandemic, rates down are in the 4s, and you're now having to deal with paying on average another $400 a month or so from the 3 point whatever to 5 point something. Yes, we do understand that that's the challenge. It may mean that you're not being able to buy the house that you wanted to buy, but that's why you should reach out to us and talk, and we can help you see where the opportunities are in the market. And this is our team. Once again, reach out to anybody that sent this to you. We're here to serve all your needs here in the Vegas Valley. Make sure you follow Living Las Vegas and Henderson on YouTube, on TikTok, and we will see you. We can't wait to report what happens with the July numbers in our August report. See you next month.